Canadian investors holding materials and financials exposure are seeing the TSX extend its record run while U.S. markets stay mixed on inconclusive data. This is Modern Investing Techniques, episode 136. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,748, up 0.3%. The NASDAQ Composite closed at 26,588, up 0.5%. The TSX Composite closed at 36,662, also up 0.5%. Basic materials and financials lifted the TSX for a third straight record close. Fed speakers continue to tie any September decision to incoming data releases. We covered EPD about 19 days ago, and it closed down 1.45% after the geopolitical headlines shifted sentiment quickly. The AI to data center theme continues to draw attention from market observers. Options market liquidity remains a frequent point of confusion for many traders. With those levels setting the stage, we move to the position we are actively watching and why we remain on the sidelines. Strategy Spotlight today centers on how options liquidity actually forms. Weekly options often get dismissed for thin liquidity. The real driver of liquidity is the underlying stock's own market depth, rather than the contract's time to expiration. Market makers hedge weekly and monthly options the same way against the stock itself. Open interest figures alone do not reveal true tradability. A monthly option listed 12 months ago can show higher open interest simply because it has had more time to accumulate positions. A weekly listed 2 weeks ago starts with lower numbers even if the underlying trades millions of shares daily. Today's mixed U.S. equity moves and steady TSX volume make this distinction practical for Canadian investors. Investors who want to use shorter-dated contracts inside a TFSA need to avoid widening spreads. Compare the bid-ask spread and average daily volume of the underlying equity against the 20-day norm before entering any weekly option. Platforms such as Interactive Brokers or Questrade display these metrics directly in the options chain. The approach has historically worked best in high-volume names where the stock itself provides the hedge. The main risk is assuming all weeklies behave alike. Low-volume underlyings will still produce wide spreads regardless of expiration length. Investors who skip the stock volume check often pay more in slippage than the time premium difference between weekly and monthly expirations. Now we turn to the practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved. Today's update covers WRLG.V on the TSX Venture in the precious metals sector. We are monitoring the Phase 1 completion of the Madsen mine shaft refurbishment. That work is expected to increase material movement capacity. The stock has not yet shown a volume spike above its 20-day average. Nearest support sits near recent lows with no confirmed breakout above the 50-day moving average. Entry without volume confirmation risks a false breakout. Maximum acceptable loss remains set at 8% from any entry point. Target remains 4 to 8% on a confirmed volume surge and retest of resistance. Confidence level stays low because we have only a single catalyst factor without volume or sector confirmation. This setup demonstrates the discipline of requiring volume confirmation before committing capital to a mining infrastructure catalyst. Listeners learn to wait for the market's own confirmation rather than acting on news alone. The Phase 1 shaft work at Madsen is a concrete operational milestone. Yet without a corresponding lift in trading volume, the price action may simply reflect general sector sentiment rather than stock-specific demand. By tracking the 20-day volume benchmark, investors avoid the common pattern where infrastructure updates produce brief headline-driven pops that fade once the broader market rotates elsewhere. Yesterday's trade review shows no newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. There is no new realized result to report today. Tools and Techniques starts with Interactive Brokers option chains. The platform displays real-time bid-ask spreads, implied volatility, and underlying stock volume side by side. Canadian users in a TFSA benefit from the same depth of market tools institutions use. The side-by-side layout lets users see immediately whether a 30-day option and a 7-day option on the same name carry materially different spreads once the underlying volume is taken into account. Access requires an Interactive Brokers account with options trading permissions enabled. The data is available on both desktop TWS and mobile. Wealthsimple trade watch lists let users build custom alerts for volume thresholds and moving average crosses directly inside registered accounts without extra fees. This lets Canadian investors monitor setups like the one in today's precious metals name while staying inside TFSA contribution limits. The alert system can be configured to trigger only when volume exceeds the 20-day average by a chosen percentage. The feature is free for all Wealthsimple Trade clients and syncs across web and mobile. Quick Hits begins with Anthropic reportedly eyeing a $6 billion acquisition of Descartes AI. The reported talks signal continued capital deployment into specialized AI infrastructure. Add names tied to data center power and cooling supply chains to a watch list for any follow-through volume. Bill Ackman has disclosed renewed ownership in Netflix. The move highlights how activist capital can return to high-conviction growth names after periods of rotation. Review existing growth holdings for similar re-entry signals on earnings or subscriber metrics rather than chasing new positions. Trump has signaled that an Iran deal is imminent. Repeated comments introduce a potential geopolitical premium into energy and defense names. Hold CAD cash with no rotation signal yet until deal terms or market reaction provide clearer direction. CTREIT maintains a 5.6% monthly yield. The trust's latest earnings confirm steady cash flow supporting its distribution. Consider adding CT Real Estate Investment Trust to an RRSP income sleeve if current yield meets personal cash flow targets. Portfolio performance data is not available in today's briefing. We therefore move forward without updated cumulative or year-to-date figures. Now here is something most retail investors get wrong, and it can cost real money before the pattern becomes clear. Imagine you want to sell a weekly call on a TSX-listed energy name after seeing a sector bounce. Your order fills at a 12-cent spread instead of the usual 3 cents. What actually happened is the market maker's hedge in the underlying stock moved against them intraday. They widened the quote to cover the risk of holding the position until expiration. Market makers delta hedge every option they write by buying or selling shares of the stock. When the stock's own average daily volume is only 800,000 shares, even modest option flow forces larger price concessions. Check the stock's 20-day average volume and recent bid-ask spread before looking at any option chain. If the stock itself is illiquid, no expiration will magically improve matters. Liquidity therefore flows from the equity market maker's ability to offset risk quickly. It does not flow from how many days remain until the option expires. The common misconception is that longer-dated options are always more liquid simply because they have existed longer. The fix is to evaluate liquidity at the stock level first, then choose the expiration that matches your time horizon. Canadian investors inside a TFSA face an extra layer because contribution room is limited. Paying unnecessary spreads on illiquid underlyings compounds the cost of every trade. Checking the underlying volume takes 30 seconds on any platform and prevents the surprise of a 12-cent fill on what looked like a routine weekly. Before we wrap, keep an eye on whether WRLG.V prints a volume surge above its 20-day average tomorrow. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets. Each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, Here's your next listen. Tesla Shorts Time, your daily deep dive into everything Tesla. Find every show free at naranetwork.com. Want the written briefing with source links? Each show keeps a summaries page on naranetwork.com. Scannable, dated, and free. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?